So yeah, let's scrunch this up so we can have a look at this. Is anyone long on the pound?
Nah, I don't look at it.
So you see. Oh, yeah, so do I actually. I do as well.
Same here. I feel
It's good
but
to
it's been
watch.
bullish.
Yeah,
It's been bullish.
yeah,
Entire day today. It's
yeah.
really fun.
I saw it last night. I saw it taken off last night when it was
That's true. Yeah.
starting to break. Let's have a look at pound yen as well for reference. The pound yen similar price action in terms of going up. It hasn't had actually the pound dollar had a better. I think the pound dollar. Let's have a look at pound dollar and pound yen compared to two. Yeah, so a bit more sideways with pound yen. But you know, bullish price action. We had that impulsive move. We've had the correction. Came down a previous structure. Pulled back. How far did it pull back? Let's clear some of this mess and noise. Okay, so I had that on there. Get rid of those fibs as well. That's a bit cleaner. Yeah, you can see this is the area. So people were looking at the consolidation on pound yen last week. We consolidated. Then we had that liquidity grab. We had that move down, broke down. People grabbed some money on that short. But you can appreciate that these moves are short-lived. They don't last for too long. So it's important to have a T1 and a T2. I have two targets. So the T1's always smaller. I look for the opportunity to make some money and move the stop to break even, just in case of stuff like this, where then it reverses on you. So it was actually a really nice pullback into support, and now it's gone long. So that's quite nice. This is a daily time frame as well on the pound yen, just sitting at that supply zone, which is working quite nicely. Let's have a look at the pound dollar. Pound dollar was clear in terms of leading the way, price action. Tested it once, the 76.4, got up to 133. As I said, we were long here prior to that. We held it overnight to 132.90 because we had the 76.4, 132.92. So that's bullish, that's broken. So looking for 135 on pound dollar. So just keep looking for 135. They're speculating on the fact that we waited at the weekend for it to test, retest, have another test. So 200 pip pullback, can plot some trend lines, keep you in the game. Nice pullback to retest, nice double top. So that was a play long, 76.4. Short it off there. That was a play. That's two setups. Again, bite back up to the 76.4 to complete the U shape. That was a play. If you were long from here and you're holding still, maybe take some profit and hold to see what it does next. It came and tested the trend line again. Break of this 76.4, having tested it for the third time, that was a play. Now, if you needed some confirmation as to what it was going to do, we talked about this on Friday and over the weekend we were looking and saying, well, it's going to either break here or it's going to fail, and you can really see that as being a key area. And when you put your fibs, you can see that is a key fib as well. So in terms of confluence, in terms of technical analysis, it's quite, pound dollar's a really nice chart and a really nice instrument to trade as of sort of yesterday and today. I saw this holding here and I thought, okay, this is going to respect this trend line. We'll take it long with a stop loss just below 132.60. I'm sure I commented on that 132.60, and you could have had it up for a good 100 pip move so far. We were waiting on Brexit, and they've been making statements. Spokespeople have been making announcements regarding Brexit, saying that they are close to a deal. I posted something about an hour or so ago from Michel Barnier saying after technical discussions this weekend, negotiations continue online today. Time is short, running out, but they're making, they're working hard to make a deal. So this is good for the pound. So, had they said we're cancelling the meetings, or we're not going to continue the deal, or a deal can't be had, then from this level here, you would have seen it drop from 133, and we would have been in a bearish trend on the pound. But because they've said positive things, and everything remains positive, the pound's going up on the premise simply that we are going to have a deal. Now, unless that changes and they don't have a deal and then it becomes no deal, then this will drop. So pound is very sensitive to that. If they say no deal, pound will sell off. But providing they are hashing out a deal and holding these meetings, this will continue to go up. So in terms of why fundamentals are so important, well, it's relevant right now because of Brexit, the Brexit negotiations between Europe and Britain. It's really relevant. So you can see how it's reflected. So the fundamental news provides the catalyst that kick-starts proceedings, like starts the engine. But technically, you still need your technicals, because you need to know where's it going to break from, where's it going to go to. You still need to have an idea. It's all very well saying, the fundamentals are the ones that control everything. It's true, they help provide the direction, but you still need to know, well, where's this going to go? So providing that they're hashing out a deal, which they are, everyone should be just taking longs on the pound. And 135 is a really good target. Retest previous structure, previous high, which is 134.83. I think it will just edge up above that and tap 135. So you've got at least 120 pips from here to get up. Note that you'd have to put like a 100 pip stop loss or so if you were long here. But ideally, you should have been taking longs from overnight or early this morning. But yeah, you can see, look, the price action, early hours, Asian session. Then we've had a 8 o'clock London Open, and there was the initial pump with the banks, institutions. They were confirming based on all the information that's coming out long. So really what I'm talking about here is a no-brainer. You don't have to overthink it. Certainly don't overthink it. Providing that they get this deal sorted, which is what they're working on at the moment, it's all positive news. That's going to go up to 135. Yeah, that makes sense, doesn't it? Without overthinking it. Fundamentally speaking, Brexit's being sorted. It all makes sense. We're going up. 135 is where we need to take this. A break of the 76.4. You can use the 76.4 strategy. You can see the price action was building all on Friday. It came to rest here, and then it's popped up during the Asian session. So Asian gets ahead of everything. They got themselves into position. Asian banks, and then London came online at 8 o'clock London time, and they pumped it up. The banks took their positions. You have to appreciate the banks are the ones that lead, right? They have to take all the risks, so they have to put their money on. So that's what they've done there. Yeah, it's that simple, really. Trading doesn't need to be complicated or complex. The complexities come with overthinking it and overanalyzing it. And somebody asked the question pretty much when we started this session, talking about seeing analysis but never being too sure, and then maybe being too afraid to risk money because through fear of losing. It could mean that they haven't backtested that strategy enough, and it could also mean that if they've got a couple of £100, a couple of $100, and that's all they have, they really don't want to lose that money because that's all they have. If someone has like 100 grand and they're risking 1%, sure, you don't want to take a loss, but you're more inclined to do so, and you're more inclined to be able to trade because you need money to trade with, and that's what it's about. If you're skint or you're broke and you're trying to become a millionaire by trading, but you've only got limited resources, limited amount of capital, then of course you're going to have that pressure, and that's added pressure that's going to stop you from being successful, because there's going to be a lot of trades that you miss out on. But at the same time, if you're a cautious person anyway, or you approach trading with a great deal of discipline, and you really cherry pick your trades, so then it's okay. You can see 10 setups but only take one. or 2. There's nothing wrong with that at all. Really, there is nothing wrong with that. That's how you should be doing it anyway. That's how you should be trading. Somebody showed me on Friday, they had 4 trades on, then they put another one on, and it's like, well, but then they were in a drawdown, and so really they were, they were coming from a psychological point of view. They're coming from chasing losers, chasing a loss, chasing a drawdown. That was the pressure. So 4 or 5 trades they had on running, and they weren't doing anything. They were all negative pretty much, apart from one, which was kind of balancing everything. It was all a mess really. So I can see why. I can appreciate why. So I think with experience, you get a feel for all of that. You get a feel for it. You know when things are right, when things are wrong. But you need to talk. You need to look yourself in the mirror and give yourself a good talking to. Because you're saying you need to kind of take it back to the beginning and say, well, is this what I want to do? Is this the position I want to be in? Is this actually working for me? If it's not, it's really hard sometimes just to pull the plug and just to shut everything down and stop and take that loss and say, you know what, this is not right. I don't feel right. This setup's not right. It's all rubbish. I'm not happy with it. I'm going to take that loss on the chin and I'm going to get that back later or in about half an hour, or going to go and do some more scanning of the markets. Again, all of that requires discipline. It's a process. It's hard, isn't it? It's really, really difficult. If you haven't had the right amount of sleep, or you're hungry, there are external factors like that. If you've got family in your ear, or you're sitting in a place where, if you're at work and it's busy and it's loud, all of that can affect everything that you're doing as well. You're not giving this your full attention. So yeah, I think trading has to be. I remember Sean Lee was saying in that video that he posted, that old video, someone reposted it, showing when he hammered the account from a 5k account to build it up. I mean, this is not, his drawdown was like 50 something %, and it wasn't the norm. But what he said was, he went and bought himself a car. He's buying himself a new McLaren, and he was sitting in the dealership, but he was still looking at his trades. He still had his phone, and he wasn't really paying attention to anything else that was going on, because he was trading, and he was just laser focused on what he was doing, the job at hand. And yeah, sometimes you just need to appreciate that. Let's get on this. Let's get on the euro dollar. Euro dollar's bullish as well. So pound dollar, euro dollar. There's New Zealand dollar. Yeah, all bullish. What's the dollar index doing? That's got to be. That's bearish. Okay. So yeah, this is consolidated. This is euro dollar. This is a weekly time frame. Last week consolidated, didn't do much, but it's all bullish. So there we go. To the 76.4 again. Somebody's talking about that 764 strategy. Take that long. 200 pips to 121, $1.21. Nice round number. Using the 61.8 for support. So yeah, long euro dollar, long pound dollar long to 135. Again, yeah, I mean, no brainer. Do you know what? Put a small position on, 0.5%, 1%, because you know that this has already moved if you've missed it. But this whole fear of missing out. If you want to get on this, but you feel like it's already moved, there's always going to be that reservation. So risk less, risk what you're comfortable with, but with the notion that say this does decide to chop around a little bit and pull back. If it drops back off 134, for example, buy the dip, get in and put the other position on, so you'll get a better entry at a lower price. And just take your time with it. So we're saying this is going to 135, but you're struggling to get in because it's already moved, because you didn't take it at 8 o'clock London time when it opened and we had this initial pump up. But you can see that it's moving. It's broken that 76.4 after the third test. and this is because of Brexit. Negotiations are looking good, looking promising. They are working tirelessly to get a deal done. Had they said over the weekend that the deal was off and there's no deal, this would have gone that way and it would have sold off. So that's why it was parked there, third time testing. And so the fundamental news is what was driving this price. And so you're now using the technicals. You've had fundamental confirmation, bullish, euro dollar, bullish. Now you're looking for technicals in terms of targets. Well, that's simple on this one, 76.4, 121, and this one, 135. As upside targets, and it's moving now. Even now, you could take a scalp to 134, for example. But be prepared for drawdown. Be prepared for the fact that your risk to reward is going to be off. People talk about these entries they want to get in here, which you should have done. Put a stop like 30, 40 pips, and then have like a 200 pip target, which is a 1 to 5 risk to rewards. So so it's a difficult one, but yes, it's a no-brainer. So often we know the journey, we know where it's going to go from point A to point B, but it's often the case of how it's going to get there. Is the journey going to be smooth, which we would like it to be? Go from point A to point B in a straight line. Or are we going to be realistic and appreciate the fact that markets don't move that way? They're living, they're breathing, driven by human sentiment. This thing's going to go up a bit, then it's going to pull back a bit, mess you about a bit, and then maybe continue on its journey to the upside. For example, could do that. Just don't be surprised. But you think, okay, on the premise that this just goes in a straight line now, it's broken out of the 76.4 and it goes to 135. You want to have some skin in the game to get this 100 pip move. But then you can sort of say, be disciplined. No, don't let greed take over and govern you. And say, well, I've missed the bulk of it, so I can't put a 1% risk on this or 2% like I would like to. In fact, I'll put like a 0.5%, and then if it gives me a pullback, I'll put the other half on. You know what I mean? And that's creating a trade plan. So, yeah, there you go. Hopefully that gives you some insight into the thinking process behind how you should trade or how you should approach a situation. If we did carried out a poll here and we said, what's pound doing? Is this long or short? And I'm pretty certain that most people would say this is long. But then trading is subjective, and so you would have those opportunists that are looking for maybe a sell off 134, and then maybe take it down for a counter trend move, maybe back down to that trend line, and then maybe buy it back up off that trend line. So you might be able to short it and go up. I mean, I don't need to do all that. It just feels like a lot of hard work to short it. I'd rather just allow it to short, and if it does, then buy the dip, because we're doing top-down analysis. So top-down analysis meaning that we start from the higher time frames, so monthly, weekly, daily. In this case, that's monthly, it's bullish. Weekly, bullish, because it's just broken up nicely. See that? 2 weeks of consolidating, and they're saying, okay, Brexit looks like we're going to get some sort of deal. Oh, cool. All right, pound's bullish then to 135. No brainer, is it really? There you go. So yeah, I looked at it last night when the markets opened at 9 o'clock London time, which was the start of the Asian session, Australia, etc. And it was just sitting there, and it went down a bit to 60, and I said, okay, yeah, we'll tuck the stops in around 130, 132.60, I think it was, somewhere like that, roughly. Yeah, so there you go. So yeah, it doesn't matter if you've missed this. It doesn't matter if you've missed any of these. But yeah, certainly the trades for today have been about the pound going long, bullish, and then other dollar related pairs as well. You can see this has scope to catch up, but I just think about euro dollar is it's been quite annoying to trade over the last few months. You can see over the last few weeks this price action. This is because of Brexit. This is because of the coronavirus. Europe's a big area, a big landmass comprises of lots of countries. They're all affecting the euro value because of economic conditions, the pressure that they are having to cope with, you know, the coronavirus. But then the US are not in any better position, are they? So that's why you see then moves like that. You know, sell-offs in a week. 1 week it's down. It's like the turn of the US to take the bulk of that, and then Europe take the brunt of it, and that's reflected in the euro dollar. So I've taken one trade on it in the last maybe 4 or 5 months, and I think that was last week or the week before, and it was just dead. It was the only one that wasn't doing anything. So I took some profit off, reduced the stop down. I then moved the stop to break even. I let it play out, and that's what we did. I couldn't do anything else, and yeah. So let's any questions? Anyone want to cover anything? Hope that's been insightful for you. Hope that's been of value, of use. I hope you can appreciate where we're at with everything, and understand how price is moving, and not to panic sometimes. Because I know that as a trader, with a move like this on the pound, if you've been stalking the pound or you're interested in going long with the pound, there's going to be emotions running high, and you're going to be sat there looking at this and thinking the whole FOMO, fear of missing out. I want to get in on this. But if you just jump in without a plan, you're gonna get sliced up. Yeah.
Hello, this sound.
Mhm.
How do you handle patience in this business?
Yeah. So like I said to you there, I mean, you want to go long on the pound dollar, and you want to take it
How
up.
do you handle
Yeah. So I just put a small position on. If you really want to be in the pound dollar long, instead of risking 1% or 2%, I like to do 2% when stuff is moving. You know, if I'd gotten on this trade at the beginning, I would have been here and taking it long, 2% risk. Stops would be at break even by now. Some profit would have been taken. You know, that's fine. But if you miss that initial move, but you still feel that this is bullish, then drill down to the lower time frames, like the 1 hour and the 30-minute, and put a small position on. You know, this consolidation here could have gotten in at 50. It likes the 50 number. Pound dollar, you know, it likes the 50 number. If you didn't know that, now you do. It likes the 50% fib. It likes the 50 number. Just understand your currency pair. That all of that knowledge, all of that helps with your patience. And then you could say, right, I'm just going to put half a position on. I'm going to put maybe 0.5% on, and take it long from like 133.55 or so. And you could have maybe then just move to stop to break even and leave this to run, or as it approaches 134, take some profit. You know, take a portion of this profit, take a little bit off it. Nothing wrong with that either. You don't have to ride it all the way up to 135. There's so many ways to trade, isn't there? So that's how you deal with patience and issues that you have with a trade. Yeah.
Hey Alex, well, I had a doubt. Like, I like this strategy, but the thing is, I think the way I place my fibs, I think I mess it up at times. So you would have your fibs like it's a question that I would like to ask you. Or you would place your fibs just on the higher time frames, like the weekly, daily, and the 4 hour, right? Or would you place them if you had an opportunity on the low time frame, like the 1 hour?
I place them on any time frame really. There's no real rule to that. What you will find, which is relevant, is on the higher time frames, when you plot support and resistance, when you plot fibs, when you do certain things, because it's a weekly time frame or a daily or a monthly, generally you don't have to move those fibs, or you don't have to move the support and resistance until it gets tested. And when's it likely to get tested? Well, it could be several weeks, several months, you know. Whereas if you're doing it on, say, I don't know, a 5-minute time frame, things are happening a lot quicker. So larger time frames, you plot your fibs and you can leave them, and sometimes they'll just be respected for days, weeks and months. Everything's happening in slow motion, playing out a lot longer. That's why for swing traders, they'll look at the high time frames and they'll say, okay, look, well, I'm quite happy to have a 200 pip stop loss or 300 pip stop loss, and I'm looking for like a 1,000 pip move, which then becomes a position trade, which is what the banks do. They're position trading because they have massive volume, so they can't just jump in and out like we can. They are steering like a big massive tanker cruise ship. We're in a little dinghy, little speedboat. We have that flexibility. So pros and cons of being an institutional trader versus a retail trader. You can get in and get out. You don't like the look of it, exit your position. They can't do that. When they take the plunge, when they put their money into the move, you see the move happen and develop, and you think, okay, look, that's institutional money coming in. They can't put it on and then 2 minutes later take it off. Imagine how long it's taken for all the positions to get filled, for that money to get filled. And it's different. So yeah, that's the difference when you're doing high time frame analysis and lower time frame analysis. So this is a 5 minute on the pound dollar. Let's scrunch this up a little bit. I can see where my higher time frame analysis is showing me the 76.4. That's down here around 133, just below. 5 minutes here we had a pump up at the start of the Asian session, and you can see that on these smaller time frames, and then it's consolidated and it hasn't really done much, just a bit of fluctuation. And then we've had this move at 7:05. It started to move up, so we stabbed down, looked like it was going to go short, liquidity grab, and it started up in its journey. And then what have we got? 5 minutes, 5 minutes, 5 minutes. It started to build pressure, and then London opened at 8 o'clock. 8 o'clock there, and then we've had this move up. If we then maybe, you could do it on the 5 minute, or let's have a look at the 15 minute. It's discretionary. It's up to you. You could maybe say, okay, that move where we went down and took the low, you could put it there on a 5 minute or 15 minute and say, okay, that's the low, and then that's the high, and see what sort of price action we get. So we get a bit of consolidation. Maybe then, if you miss this one, but this is your confirmation to go long, wait for it to consolidate, pull back, and then take it long here on the pullback of these fibs. Something like that. That's all these lines help you to do, just help you to gauge the price action, help you find some otherwise invisible to the naked eye support. These just help you realise where support is, and you can see it with the price action as well. Previous structure. This is 15 minute chart. I think, okay, look, I'm going to go long, it's bullish, right, now I'm going to get in. It's tested it once, tested it twice, testing. It's not breaking, right, I'm going to go here, I'm going to take this long, I'm going to get in. Where's my stop loss going to be? I think I'm going to put my stop loss down below that 76.4. I think this is bullish, so we shouldn't be really testing the low. There's no reason for it to come down here, because it's bullish, so it should be making higher lows. This one has made a lower low, taking out those previous lows, but that's okay. That was just a bit of stop hunting before it needed to get some liquidity before it made its next move up. And then you look at the time, when's that happening? Well, that happened an hour ago, and it started to make its move, and that's on its way. It's done that, and you can identify with that price action alone that this is now on its way. And we've been talking about it for the last, I don't know, 30 minutes or so, and price was at here about 70 something, 78, and it's like, okay, this is going long. So 10 pips later, it's just going to keep going. It's going to keep going up. It's going to go to 135. So what we can do here is just keep looking for buying the dips, and that's what we do with the smaller time frames. That's how we use these fibs. Now these fibs are good for a few hours. Obviously I'm showing you what happened. Now I'll remove these fibs because they're no longer of use. They're done. They're invalid, so to speak. I'm not going to keep that on there. It helped me identify the price action. They're done, so you remove it. Whereas on a daily, that mine are still on here because they don't need to be taken off. So you can see the difference when you're using high time frame analysis versus lower. Lower is to help you find an entrance, an entry into the market. Just helping you get into the market. Don't get too mesmerized and hypnotized by the small time frame price action, because you get a lot of this. The higher time frame doesn't really show you that, but all that you can look at it and you'll be like, oh god, that's like, it makes you dizzy, and you like, it makes you nervous and react, and you'll end up exiting your position for a loss, and then it goes up and you think, oh, I should have just waited. So trust the process, trust your analysis. You want to take this long? We're saying pound dollar to 135. You can all see that happening. There's no reason why it can't go there. I mean, there's never a guarantee. The only thing that I can see that would stop that from going to 135 is if they suddenly turn around and Europe and the UK have a hissy fit and a fallout and say, right, we're not going to do a deal. Forget it. The deal's off the table. Well, then pound's going to tank. That will spike down. That will spike down. That will take all your positions off in terms of stop loss. And so, yeah, understand that is always a possibility. But for the last month or so, anyone who's traded the pound would be aware of the fundamental risk involved with Brexit, and you will have seen volatility at random times of the day because somebody said something about Brexit, and so that's the risk you have to take. I was saying a few weeks ago, I'm not taking any trades on the pound pairs because there's too much chop and volatility because they're trying to sort out Brexit, and every time someone says something, we had like 2-3 weeks ago, one hour or one day, someone would say, yeah, things are going really well, and the deal's been done, pound would rally, and then someone would come out half an hour later or the next day and say, oh no, it's not going very well, and the pound would tank, and it was just a joke, and it got ridiculous, and so you couldn't trust anything that was happening. But right now it seems like they're approaching, they're getting to the end of negotiations, getting to the end of that deal, and so the pound, for that reason, broke that key area, which I tell you is powerful, and you can see for yourself with price action, 76.4, it's powerful, it works. It's the last form of resistance before it makes 100% retrace. And so now it's cleared that. There's nothing to stop this from going up. There's nothing in the way, is there? It's got a free run to the upside. So you have to consider, though, entry, right, where you can't, it's difficult to buy up here, or if you buy up here, take a smaller position, reduce stake size, because that there's always the possibility that this could drop. And anyway, if they said that negotiations are off or whatever happens with that, then yeah, I mean, this could tank, and just stand aside and say, okay, your stop loss was tight anyway, put your stop loss at somewhere like 131, 133.50 for like 30 pips or so, and maybe 0.5%. So in actual fact, that's like I don't know, maybe that's like a 15 pip stop loss because your risk is half, for example. There's so many ways to play it. What's the worst that will happen? It'll come down here, stop you out, big deal. Wait for the next setup. It wasn't meant to be. Negotiations are off. No, negotiations are back on. Okay, we'll take it long. It's about understanding what you're trading. Understand if there's fundamental influence. Just that's it really. I don't think you have to complicate it beyond that. We've given a scenario. Yes, yeah.
So what I've been trying to backtest the 764, and would you think it's a good idea to backtest it across multiple pairs, and then like what is the best way to backtest it?
So first, pick the pairs or pick the instruments that you like to trade and start with them. So if you have like 3 or 4 favourite things that you like to trade, whether it's gold or pound dollar, pick them and then just start with them and do it on a 1 hour, a 4 hour, and a daily, and start backtesting with them. You wouldn't have to go too far back to start seeing it time and time and time again. Shall we have a look? Let's have a look on a. Let's pull up.
Yes, please. I was testing it using the USD dollars.
What, pound dollar or USD? Dollar CAD?
Yeah. No, gold dollar. So.
Oh, gold. Okay, so gold. You're testing it on gold. Let's have a look at gold. So say start on the higher time frames. 4 hour daily are good. 1 hour is okay as well. maybe go to like a weekly. And then what you can do is when you identify it on those high time frames, then you can maybe drill down within that range, drill down and drill down and drill down and see it play out several times. What I tend to do is I tend to have examples where things have happened and things have, back tested, and so it has played out, and I take a screenshot when I see something set up. If you started today, being a Monday's a good day, and say, right, I'm just going to back test today, or go as far back as last week and try things out. But otherwise, you hear people say they like to forward test. I'm more of that kind of person as well, because I've been doing this for a very long time and I've seen it all and I kind of already know, and I've made notes. And if you're starting out, say today, back testing, maybe look at forward testing. Requires a bit of patience in terms of waiting for things to develop and play out. So you could start today and say, okay, the first one that we're looking at is a pound dollar. So use this as an example, as your first example. Forward testing means that you're going to wait till tomorrow or another day or next week for the next setup, for another 76.4 to set up, and then you'll record that and you'll note it and you'll make a note of how it played out and what happened, and so forward test. Wait for things to actually set up and then do it, as opposed to back test. Otherwise, back test, pick your favourite pairs, go on like a 1 hour, 4 hour daily, and scroll back and have a little look. I just looked at that, and that's a whole job, I'd say, a whole week's worth of data collecting and noting, which is cool. It can be fun or it can be boring. I don't know. Depends how much you enjoy looking at charts, or how much you enjoy trading, or how much you enjoy doing all the admin back, behind the scenes kind of work, which is what you need to lay those deep root foundations to make sure that you're a good trader. You're going to be a good trader. Like, did you read my write-up, that psychology thing I talked about yesterday with the story of the Chinese bamboo? And for 4 or 5 years it does nothing. You have to tend to it, you have to water it, you have to give it the right amount of sunlight, the right soil, everything's got to be perfect, and then it does nothing. Year 1, nothing. Year 2, nothing. 3, 4, 5 years, nothing. It's not until the 5th year. But in the 5th year, so after putting in all that work, in the 5th year, it finally pops and it sprouts. But not only does it sprout, but in 6 weeks it grows and shoots 80 feet in the air. 80 feet in 6 weeks. So for 4 years, you've put all that work and effort in. Same with trading. You'll put all that work into back testing, into trying things out. For you now, you could say, I'm going to forward test. I'll do some back testing. I'm going to do some forward testing as well. So use this pound dollar as your prime example. Do all that. And then it may take you 1 year, 2 year, 3 years, but you've got some data then. You've got some experience. And somebody asked earlier about that they have this analysis paralysis, or they have this fear of pulling the trigger. Well, it's because you haven't done the back testing. You're not confident in your strategy. You're not confident in what you're seeing because you haven't seen it enough. That's all that is. But I guarantee it's a different story. If you keep at it, in 6 months' time, you will feel confident. So things just slot into place. It's that tipping point that you get to. So don't give up, because if you give up, it's like you're planting. You're planting that seed and you're expecting something to happen, and we live in a society now where everything is on tap, everything is available, instant gratification, and that's a problem for traders, for new traders, because they want to be rich yesterday, and then they are duped into thinking that they can have that Lamborghini because they're watching some idiot on social media, who they're paying $150 to subscribe to this service, and then they seem to think then they're going to be driving a Lambo, and it's like, well, no, you're giving him $150, so he's going to have the Lambo because he's got 200 subscribers, so he's earning 30k a month, and so in his first year of back tested, he's he's able to afford a Lambo, which then reinforces the belief system that this is him working so hard and all the rest. And it's not. It's just clever marketing. And it's quite funny, really, isn't it, how that works? Don't get me wrong, these guys, they have to do a lot of marketing. They always got these pictures of them out in the street somewhere, or some abandoned car park, taking a photo of their standing in front of their cars, and they might have a, at the moment, I think what's the fashion at the moment? It's the Lamborghini SUV. Everyone's getting one of those at the moment. Looks like something out of a Batman movie. It's kind of cool. I quite like it. I'd be inclined to buy one. I'd be inclined to buy one if I could really justify spending a couple £100 just to sit in like a pumped up lump of a car. I mean, I don't know. Whatever. Each to their own. I think if I was 20 years old, my testosterone would tell me to go out and buy one, buy two, buy three, swap it round every month. But I'm not that age now. I'm over all that, and I've had supercars, and I just joined a supercar club, and I drove them all. The sexiest one was a Zonda. And I've done all that. That's not what this is about. This is about laying those foundations now to get to a point where you're comfortable with your life, so you have a comfortable life. So you have to know what is trading for you. What is it you want out of this? What does it mean to you? You appreciate that you've got to work, graft, and it may take you 3 years, it may take you 6 years, it may take you 2 years, and you can't really put a time on it. It depends how much foundation you're laying. But you imagine that Chinese bamboo, it wouldn't be able to shoot up 6 weeks, 80 feet in the air, if it hadn't laid the deep foundations, the deep rooted system in the ground first. It would just fall over, wouldn't it? So that's the same principle with this. Anything you put in, you're going to get out, but it may take a few years. And a lot of people just, in this industry, it's the easiest, or it's the hardest, easiest way to make money. That's what trading is. It's the hardest, easiest way to make money. If you can master it, then you've got your own cash machine, ATM. You can just, come in, take some money. Like me, don't have to work for the rest of this week. Just do some of this stuff, share with you guys, give some back. It's good karma. That's it. I don't need to worry about working though, or putting another trade on, or chasing this pound dollar up. It's like, yeah, it's just going, whatever. Even part of me though, my emotions, part of me saying, logically thinking, saying, why don't you just stick something on it? Even me thinking, I'm talking to you guys, 0.5%. Maybe I should stick 0.5% on and just ride it up. No big deal. But I broke 50% this month. It's the best month I've had all year. And we did that last week. We were finished by sort of Wednesday last week. So worked out half of the month, and I've already, absolutely annihilated the markets because of the vaccine news. There were certain conditions that were right. The vaccine news presented an opportunity to take the Dow Jones long, US stock markets, and to short the hell out of gold, because that just fell over. So we weren't doing 2%. Well, we were doing 1 and 2%, but we were doing multiple 1s and 2s. And we were just really rinsing the moves. And so that's how we were able to, keep the risk in check, but we were doing it multiple times. And we were seeing moves that were yielding, 200 pips, 150 pips, 300 pips, 600 pips. In terms of percentage, that's equating to like 6%, 4%. They were just on these trades. And you imagine you do like half a dozen. I did, not last week, week before, I did 15 trades, which was my busiest week, because there was stuff happening, stuff going on. It was mostly on gold, a bit of pound dollar, and mostly on the Dow Jones. And that's what happened. And just, I think a bag like 30 something percent on that week. I had like, prior to that week, I had bagged like 5%, which is great. And then last week was about 3% or something. I did share my journal. So yeah, you can see, that it's a never-ending buffet. What is it you want to get out of this? You just have to make sure that you've got a plan in your head what you want to do, and if you're struggling to pull the trigger, to take the trade, please share that with me, and chuck it over and say, yeah, I need some help with this, and send me a message. That's what I was inundated last week with loads of messages because I said I'm off now. I've got time. I was up until about almost midnight last night, and then I woke up super early. I had a lie-in, so I woke up about 6 o'clock this morning. That's my lie-in, and so yeah, I've just been putting in the hours to share with you guys. Really, that's a lot of it's come from that. So if I'm putting content out there, make the effort to have a look at it, and it'll probably answer a lot of your questions. And if you still have questions, ask. And these are good times to ask as well during these sessions. So yeah. Morning, Chris. How you doing? Chris, are you there?
He might be away from the keyboard.
Yeah. So he's doing his hair, bless him. He's a handsome devil, isn't he? This Christopher. He's in the wrong business. He should be a model.
Can you guys hear me? Yeah, you can.
Yeah. What do you want to look at, Chris? What shall we look at? Should we go over this pound dollar again because we analysed this last week?
Sure, I'm not sure what you guys already did. I don't want to, you guys doing the same stuff, but yeah, whatever you want. Yeah.
I've recorded it, so I'll send it to you if you want. It's 45 minutes. There's a lot of waffle, but yeah, I've
5 minutes of showering. There we go.
yeah. I mean, yeah. I'll just leave that running for a little bit. We'll get it to an hour. I think we've covered a lot. Does anyone want to have a look at anything else? What we said, Chris, was on Friday. We analysed a pound dollar pair because it had tested, retested, and was tested for a third time. Generally, in terms of confluences, testing a certain area 3 times is really, really good. Is really useful. Really powerful. You know, it's going to do one of 2 things. Then it's pretty much gotten to the biting point where it's going to react, and yeah. So that's why we were looking at it, and we were saying the reason it broke long is because we had positive news coming out of Europe in terms of tweets and information to do with their hashing out a deal. It's looking promising. Brexit negotiations are going well. Had they said the deal is off, they're not making any progress, pound would have sold off that 76.4. So the fundamental news is what we're saying is what is the driving force, is what triggers things. So you need to always be plugged into the fundamentals to understand what's going on. You can't just use technicals.
Okay, very interesting. Yeah.
So the technicals, yeah.
I'm just gonna say, are you looking at my Facebook or Forex Factory and all that just for the news update?
So with Twitter, you can, I think you can set up things like a tweet deck, and you can subscribe and follow certain news news outlets, companies like Reuters, Bloomberg, CNBC, Forex Live. Yeah, there's quite a few. I've probably got about 8 or 10 of them. And so when one tweets, generally you'll get 4 or 5 of them tweeting the same information, and it's pretty up to the minute, telling you what's going on, because you'll get like a reaction in the market, and you'll be like, oh, okay, why is that? Why is it doing that? And straight away, you'll see why. It's funny that people want to be traders, but they haven't got anything. They've got nothing. They haven't even got a TV on CNBC or Bloomberg. They've got no means of media. We are more connected in the world than we've ever been before, and there's no excuse. You could be subscribed. Any apps on your phone could be to any of these news feeds and have the notifications on, and so when something happens, you'll get it to your phone at least. What makes me laugh or smile is I'm in these groups, these forum groups, these chat groups, and there's always some so-called trader who will he'll ask, why is it doing that? And it's like, well, so you don't know. If you don't know, it means you shouldn't be trading. And yeah, it's just Thanks. Cup of tea, please. That'd be fine.
Very fair.
Well, no, it's just about best practice. It's just about having, yeah, it's just about having being informed. This is your business. You want to know what's going on. You want to know what's going to affect your business. Trading is a business. You treat it as a business. Did you read the piece I wrote yesterday about the Pearson's law? That's quite good. I think for people to help achieve their goals, they should have be held accountable for their actions. And I think in this business that would really help. And so having a mentor or having somebody that you can answer to, whether it's the wife or the girlfriend or the mum and dads, have somebody to hold you accountable. So we said, if you are looking at weight loss, then you can jump on the scales every day. You can even take that a step further, and you can buy one of these fancy weighing scales that connects to your phone or to your heartbeat or something, and it will tell you up to the minute what's going on, how much calorie burn you're doing, and stuff like that. It depends how fanatical or serious you want to take it. But by doing that, you're taking action, and by putting that action into, by taking action, you've suddenly increased the chance of achieving your goals. Now, if you take that one step further, studies show that if you take it one step further and you say go to a fat fighting club and you go and see like your coach and you have to report to them every Saturday morning, and you have to say, right, go on the weighing scales there. You actually go to a place and say, right, go and weigh yourself, go do a weigh-in, then that will actually help you lose more weight. It just helps because you feel obliged to work harder because you're going to have to answer to somebody. It's that accountability that makes you work that little bit harder. And I think that is a really good way to work in this industry, because the problem here with a lot of retail traders is that we choose to hide behind our screens. And by doing so, you're making mistakes. And you're not accountable for those mistakes, or you're not taking responsibility for them, or you don't know how to fix those mistakes. You take a loss and you're sitting there and you're stressing about it and probably swearing at the charts, swearing at the screen. That's not going to help. So you haven't got a process to say, right, what about when I'm having a really bad day? What do I do? And people don't know what to do. And so one method would be to have this, you measure performance and you report it. So measuring it is one thing, but reporting it and sharing it with somebody, having a mentor, having somebody, a friend or another fellow trader to share with, to bounce off, that will work. I promise you that will work, and you'll see results. You'll see results. Your results will just shoot up exponentially. It really does help. Every week, report in, have an update, do stuff like that. It helps. It really does. And I think also, what you need to understand as well in this business, that everything's stacked against you. So any little thing that I suggest or you read out there or you see on YouTube, try it. Try everything. That's part of the process. That's all part of back testing. Try it and see what works best for you. And it may take several years, but by doing that, you're laying that deep-rooted system to have that solid foundation to work off, and you may not see results in the first 6 months or year or 2 years, but don't give up, because the worst thing that you can do is give up just before you get to that tipping point, just before everything slots into place and you have that eureka moment, and all of a sudden you start seeing these results and you've just quit just before that, and you're like, why did I quit? You'll never know though. You'll never know how close you came to succeeding, to being successful, and that's a horrible thought. People try things for several months and then they quit. All those people that are going to be talking about New Year's resolutions in December/January, how many will actually stick to these resolutions? They'll do it for 2 months, and then come February, March, they'll have forgotten about it. It's like, oh look, spring. Look, there's daffodils. Easily distracted. What were your New Year's resolutions? I don't remember. So there again, that's a good simple exercise. New Year's resolutions. Hold yourself accountable by reporting to your girlfriend or your partner, and they can report to you. So you have a set of resolutions. They have a set of resolutions. You trade and you motivate each other, and you egg each other on, and you'll find that will work. Or you'll see improvement. It all sounds a bit gimmicky, but hey, what have you got to lose? If what you're doing, the way you're living your life right now, is not seeing the results that you desire, then that's that definition of madness, isn't it? We hear that saying so many times. Keep doing the same thing over and over and expect different results. Yeah, good luck with that. You might as well sign off now. Stop wasting your time. Wasting your time. You're not wasting my time, but you're wasting your own. So it's just sometimes people just need a bit of a wake-up call as well. And I think some people are a bit too sensitive as well, that you can't be told what to do or told to try something different. It's almost like they take offence by it. They're too worried about that, instead of actually listening to someone saying, "Look, I've got your best interests at heart. I'm trying to help you." Yeah. So yeah, anyway, there we go. These are my charts on pound dollar. Shall we look at something else? What else shall we look at? Anyone want to share any charts, or anyone want to look at anything else out there?
I want to do GJ. I know that's a very popular pair for a lot of people. They like trading that one. Did you do that one? Or?
GJ. Uh-huh. Yeah, GJ was very similar to the pound dollar in terms of previous structure. Consolidated for most of the week and then fell over. There was some money made there to the downside, a bit of a liquidity grab, came to test previous structure, and then it has been bullish. This is a daily time frame, so we had the overnight move, and we've had the bullish price action this morning, pretty much from the start of the London session. And you can see that we went to 140.30 on that previous move up. Anyone who has listened to what I've said about pound yen, or anyone who trades pound yen, would note that the pound yen has it likes the 30 number. It has good respect for the 30 number, and you'll find that it tends to hit those 30 levels and then react off there. So look, 140.30 was about 10 pips away from the 76.4 as well. So never an exact science, but certainly I would have been looking, had we, you see this massive pump up, and you think, oh, okay, this is going to the 76.4. Didn't quite get there, but I'd be looking at the reversal on the daily and say, okay, didn't quite get there, but we can start shorting this, start looking for shorts. And so I did, didn't I? In actual fact, one of my trades on that week, the second week, not last week, but the week before, I shorted pound yen. I got in down here somewhere, 130, I think it was 138.50, and my stop was at 139, and I was just riding this down. And so then we came to consolidate, and where's the low? The low is 137.20 area, wick down. You could say, okay, I'm going to buy at 137.30. We know it likes the 30 number. Your drawdown might have been 10 pips or so, depending when you got in on the move, as it's starting to go up, having stabbed down to 20 and failed, getting at 137.30, you wouldn't have had any drawdown then. So yeah, 137.30, back up there. Again, people talking about back testing, looking for 76.4. This is a good one, because we're in this process of looking for the retest of the 76.4 and the 140 round number. This is one to check out. I was saying to people, rather than maybe focus solely on back testing, look at forward testing. So look at what is about to happen, and that's what I like to do. because I've been backtesting for 16 years, I now look at what's happening because I've looked at backtesting. I understand what I'm looking for because I've been looking for it for such a long time. I know what I'm looking for. I know what looks good, and I recognise when something is setting up, when something's worth trading. Which that's just experience. Experience pays, doesn't it? So now try forward testing. Focus on that as well. Do some back testing in your spare time, but also keep a note on this. So 76.4. Let's see it get up to 140.30 again, and test this area. And if you want to take it a little bit further, drill down to say a 1 hour time frame, and let's look at the 76.4. Where's that sitting on this price action? Let's get rid of that. That was something from whenever that was. There. Let's take that, and now we're starting to move up. So let's focus on this move up. So take it down to the low, and you can see it was 137.19. Drag it across, and let's see, move that, and just establish where the 76.4 is. So for an intraday move, and day traders looking for 30 pips, 20 pips, 50 pips, your upside target would be, if you're looking for the 76.4 of this range, it's 139.57. So what I like to do generally most of the time is round it down or round it up. So you could say 139.60 because it's bullish and we're looking for the 100% retrace. We're looking for that. So why am I bringing this into the mix? Why am I adding these layers? I could just do without and just leave it naked and just ride it all the way up to 140. But I generally like to have two targets, and my nature as well, my style of trading, my characteristics tell me that I'm quite an impatient trader, so I want some profit. I need instant gratification. After 16 years, I think I'm due some gratification. It's kind of like that mentality. I don't want to be sat looking at charts all day, every day. The screen time I've put in, the hours I've put in over the years is enough. So I'm like, okay, where's the nearest profit? Where's the nearest place I can take profit? That's my thinking. So T1's going to be there, 139.60. So that will give me from 138.85. Oh yeah, pound yen likes 80 as well. Likes the 80 and the 30. Often range bound price action between 30 and 80 will give you 50 pips. You could intraday trade that all day long on pound yen. Just buy and sell off the 80 and the 30. Just do that. You could have a strategy just for that. It works. Backtest that. So I think with experience you start to recognise price action, and so then you think, actually, I noticed that that's happened a few times. Let's backtest that. Let's see if that's happened more than just these few times that I've noticed. More often than not, you'll see it's happened again and again and again and again and again. And you think, oh, okay, cool. Then you think, okay, I'm going to formulate a strategy for that so I can monetize that. Monetize my research, monetize my findings. And that's what trading is. A lot of it. Analysing. Finding something that you see happen over and over and over and over again, because history repeats itself in trading. And then you say, okay, well, how do I make money from that? So that strategy, you need a trade plan, a strategy. You put that together. You say, right, let me just keep back testing that with a demo account. And you think, okay, after so many weeks, we're like, okay, now I'm going to put a 0.001 on there and risk and take a risk. The whole thing I'm saying there is a process, and that's what you should be doing. A lot of traders will come in. They're coming from the younger generation. They can't help it. They're coming from a society that's giving them instant gratification. Everything is available to them. And so with that mentality, they're coming in thinking, oh, I want the profit now, so I'll just go in with a 0.1 or 0.2 and make money, and they'll pull it off a few times. But without thorough back testing, what happens when it doesn't quite work? Because it's not going to work 100% of the time. It's like, how do they react to that? How badly do they react to that? How emotional do they get? What leads to them over trading is the losses, chasing the losses. because they didn't have the patience in the first instance to backtest something that works really, really well most of the time. And then what happens there is they'll forsake that whole process because they're emotional and they're taking a loss and they're sulking about it because they haven't manned up, because they've made a mistake and they know they're wrong and they haven't dealt with it properly, and all sorts. Everyone's different, but it's just that whole process. So then they'll end up forgetting that whole strategy because they felt like it didn't work, and they've missed a trick there. They've missed the whole bigger picture. And then maybe in 3 months' time or 6 weeks' time or maybe never because they've given up. But maybe in 3 weeks' time or the next day or the day or the week after, they'll be like, right, let's get back to it. Now, what was I looking at? Or they might stumble upon that idea that they had 2 weeks ago, but they didn't follow it through. But then they revisit it and say, oh yeah, actually, I remember I was doing something about that pound yen. Alex said something about the 80 number and the 30 number. Let's go and investigate. It looks like it's doing that now. And then you get back to it. So then people say, why does trading take so long? Well, each to their own. It might take somebody 3 weeks. It might take somebody else 3 months or 3 years, because of all these external factors, these personal factors, and the journey. What you need to do is you need to park your emotions first and foremost. That will just be a hindrance. It will just, you see what I'm saying there, the bigger picture. It's going to affect everything you do. Your whole decision making process is going to be messed up just because something happened. And that's life as well. Certain things happen that lead to a chain of events. So then that happens because of that. A chain reaction, isn't it? Actions and consequences, actions and reactions. So with trading, it's the same thing. It's all human sentiment driven. So you need to get rid of all that noise. You need to have laser focus. Get on it. Understand here that I understand myself. I'm very impatient because I've been doing it a long time. I don't want to be sat in front of the charts. I want my work-life balance. One of the reasons why I became a trader for myself as opposed to staying within an institution and working 20 hours a day for them was so that I could do 2 hours a day for me and take the rest of the day off, or do the month that I've had the best month I've had all year, made 50% capital, and now I can sit around for the next week or so and do as much or as little as I want. So I'm reading a book, The Brain. I read it years ago and I want to get back to reading that again. I want to do some more stuff on psychology. So this thing's going to go up to we're going to get up to 139.60 area if I was in this trade, and I'd want to take profit there, T1, move my stop to break even, and then hold for that move to the top, back up. It might faff around, it might do some of this. You see guys doing their analysis and posting their charts, and they'll do things like this, which makes me laugh as well. It's not a bad thing, actually. I'm not taking the mick. It's not a bad thing. You see this kind of thing. It's like, okay, so it's going to go like that, and then it's going to go, and then it's going to go down a bit, and it's going to go up a bit. It's going to do some of that, like that. Probably get down and retest that previous fib there. And then with the US traders coming in, it'll probably go and do something like that. By the end of the day, into the UK London close, we'll get up there to that 139.60, something like that. For example, hit the 139 first and drop off there, some profit taking, and then get up there to that, and then overnight into tomorrow, we'll probably see it break up, or by the end of the week, hit 140.30 or something, if that helps. But yeah, just appreciate that's what you have to do. Hope that helps. I hope that helps as well. It's I think the way a trader thinks, I don't think I'm thinking any different to any trader. I just think that I know the answers, I have the solutions, whereas maybe a new trader will be thinking along the same lines, but they encounter a stumbling block and they don't know how to get over that hurdle because they haven't got the experience quite yet. But that will come. Just don't give up. Keep pushing. Keep persevering. You don't know when that tipping point's going to happen, but when it happens, I don't know. It's like a light bulb moment. You have you have what athletes call flow, and you're in the zone, and at that moment you've arrived, you are, well, they say don't get ego involved, but your ego will be doing cartwheels and somersaults, because you'll be like, okay, I'm seeing consistency and success, and wow, this is game changing. And anyone who thinks that ego doesn't have a part to play in this business, it does. What you need to do though is you need to kind of compartmentalize it. You need to kind of put it away in a drawer, tuck it away Monday to Friday, or whenever you finish. So try and finish on a Thursday, so that Friday, Saturday, Sunday is a long weekend for yourself. Enjoy, take as much time off as you can to really justify that you're a trader for yourself and that you are your own boss. And if your family and friends or anyone who dismisses you as take you seriously, you can show them that you're making money, but also you're having like a 3-day week or 4-day week or a 10-day month, and you're able to live off the proceeds, the profit that you've made. I think that will do wonders for your self-esteem and your ego as well. That will be massaging your ego. Come the weekend, be sure to celebrate success. If you've made some money, if you made 500 quid, say, right, what 500 quid I'm going to withdraw whatever, 100 quid, 200 quid, 300 quid. I'm going to pay a few bills. I'm going to keep £100 for me. I'm going to go treat myself to something. I'm going to go treat my family. You know what I mean? And share some of that love and yeah, just that's what trading for me is about. So what's it about for you? What is it you want from this? Because you can have pretty much anything you want from this. One good thing about setting goals is if you want to appreciate that trading will take a little while, you could say, okay, instead of paying some influencer, marketer online $150 a month, stick $150 in a savings account and say I'm going to do that for 12 months and I'm going to build up enough money so that by the end of 12 months I'm going to have a trading pot. And I'm going to trade with that money. I'm not going to give it to somebody so that they can upgrade their Lamborghini. I'm going to keep that money for me, and part of my trading goal, it's about setting goals for yourself. So say I'm going to set that as a target. I'm going to save £100 a month or whatever it is, and at the end of the year I'm going to have this lump sum of money that I'm going to start trading with, 2-3 grand. You think, 12 months, I can't wait that long. But you think, like, you hear the stories about your grandparents and your parents and how they always used to work to save. They didn't borrow on credit. They saved, and when they had enough money, they'd buy what they wanted. And that's kind of gone, isn't it? Because we live in this world of instant gratification. We can have anything we want. Years ago, you'd have to go to the library if you wanted to find out some information. Now you just go on your phone and Google it. Ask Siri, it's all there. You can't apply the same principles though to your happiness. You can't be instantly happy. You can't be an instant trader. This isn't the Matrix. You're not Neo. You can't just put a chip in the back of your head and now you know Kung Fu, or now you're a successful trader. It doesn't work that way, unfortunately. You're going to have to put in some graft. And I think for young people, they're in a society, they live in a world where everything is on tap, and then they come into this arena and realise, actually, I can't make this work by tomorrow or in 24 hours. It's not as easy as that. And that's like a realisation. And so people ask me, why are you so chilled and why are you so humble? And it's like, well, because if you've been doing this job for as long as I have, it's like it's like being caught up in a whirlwind or a washing machine. I've been thrown around and battered and bruised and have grey hairs to show for it. I'm growing this beard for Movember and I'm looking at it and I've got grey bits and my group, my team are taking a mick out of me, calling me grandpa. I'm in my 40s and, and it's quite funny. And it's like, well, I put that down to this business because of all the hours and the hardship. So being humble is just comes with it, really. You can't help but be a little bit appreciative and blessed. And then people say, well, why don't you go out and spend it on a Lamborghini or something? And I'm like, well, maybe I would have done a few years ago, but after watching all the youngsters on Instagram do it, they've kind of they've kind of taken they've kind of killed it for me, really. It's not really something that I'd want to do now. Don't get me wrong, I'll upgrade a car every year, but I don't need an uncomfortable ride like a Lambo to sit in to drive around with solid sports suspension. You know what I mean? I'm a bit more like, I need something like an E-Class Mercedes or an S-Class or something with comfort, air suspension. You know, I look for stuff like that. And besides, I'd rather fly. Why drive when you can fly? So get into flying, like aircraft. Just do other things. Just start bigger picture kind of thinking. So that's what I do with my spare time. And then my other spare time is cooking. You see the cake I baked yesterday? Just, I don't know, just stuff like that, which you think, really? But yeah, just, I don't know, living simply because I can. And yeah, I don't really need much. So you got to kind of know what you want to do your trading. What's it for? If it's to buy a Lamborghini, you might as well log off now, because really, that's just, really, is that all you can? Is that as far as your imagination takes you? You know, the guys on Instagram are only doing that to promote their business, so that people follow them. They're selling the dream, and with the $150 that you pay them, they'll put that towards upgrading their car or buying another one to sit alongside that one. The amount of times that they keep going to the garage, or you've got some random picture of them in some abandoned car park with their cars parked side by side, and them standing there in their Balenciaga or Gucci or something. You know, just like, it's funny. It's not like, I don't look at them and go, wow. I look at them and go, really? But there's people there, youngsters, that are looking at them going, envy. Wish I could do that. Yeah, you know, and it's like, it's quite sad, really. But that's the nature of the business, and that's the world that we live in right now. And but recognise it, filter it, take what you need from it, and understand that you too can have that if that's really what you want. But I guarantee, if you become a successful trader, or you get good at this skill, and you master this skill, the last thing that you're going to be looking at is stuff like that. You're going to be looking at so much more, because it opens up the world to you, world of possibilities, things that you've never even thought of, that you dare to even dream of, because you've never been able to you were never in a position to attain that stuff, to even entertain the idea of being able to do it. And then you're like, oh wow, I can do that, really? Wow. You know, and then life just becomes that little bit sweeter and richer. And so that's what your trading's got to be about. And if you're going to go long on the pound pairs, I appreciate that it's going to do some of this funny old price action, hit some of these support levels, drop back down, but ideally we'll get up to like 139.60 there. And did the pound hit 134 while we were talking? Let's have a look at that. US sessions starts in just under 1 hour. Let's drill down. Did it touch 134? Yeah, maybe. Nearly. And then euro dollar as well. Don't forget euro dollar to 121. So look at where price action's going. Look at the potential. Understand that these are what the markets can do, where we can get to, and then try and find an entry and manage your risk. And if you need to sort of share a chart, chuck it over to me. You want me to take a look at it, I'll have a look at it, no problem. Help you with whatever you need, really. Yeah, it's fine. Is there anything you guys want to look at? Anything else? I think we've covered everything.
Hello, this Tom.
Yeah, hello, mate.
Yeah, there's this thing that everyone says about small fund getting funded, and I think I'm of the school of thought that for you to be profitable and have good profits, you need good balance. When I mean good balance, you need a good account, not just your account that is running in hundreds of dollars, rather in thousands of dollars. and that's what takes me to FTMO.
Yeah.
So right now, I want to get funded for the account.
Yeah.
I've done the demo, but
Yeah.
each time I find out that I'm over trading,
Yeah.
though I'm winning my trade. Though I'm winning my trade. Some of the challenges I pass it in just one day,
Yeah.
but I'm not really cool with it. I'm not really cool with it, but I know that okay, this setup works. When I see the price moving up, I tend to load it up. I tend to enter
Yeah.
more trades. So
Yeah.
here I see my problem. So how do you balance this? Once person is telling you don't overtrade, but I
Yeah.
know they've actually given us a limited number of days. So if you want to trade like a turtle, slow and steady, you might end up at the 27th day, you find out that you are not meeting up the target. And
Yeah.
then now you have to overtrade again. So
Yeah.
as to get the profit. So it's kind of how do you handle such situation?
Yes. Yeah. No, I
Me, I think I'm overtrading, but
yeah, you are over trading. The problem with over trading is that we often don't realise if we're pretty new to the game, we don't realise having 4 or 5 positions open is actually overcooking it and over trading, and it's kind of like, what are we doing? But we don't realise. But I guarantee, whoa, we just had a massive spike down on what? Okay, big spike on the stock markets. Ma- Sorry, just see that spiking down. Let's have a look here. Let's get on this.
Gold had a similar spike down just now.
Yeah, yeah, but nothing like that. That's off that area. Spike. That's just volatility. And let's have a look. Um, yeah, I think these questions are the same questions that I've been hearing over the last week, and I've been seeing. So I wrote a couple of things to help explain what's happening there. You know, why you feel the way you do, and what you can do about it in terms of solution and possible ideas. So there's a couple of things. There's the first one. I'll share this one. This one is, where is it? Uh, duh, duh, duh. This one's a good one. I wrote this the other day. Trading with emotion. Let's get this up. So this one, I'm being blunt. So you have emotional issues because when trading, because you're the market's bitch. That's what we said, biatch. Okay, so being blunt and being honest, it's a lot of things. You know, mentors won't tell you this. The influencers online, they won't tell you this, but because they want you to trade, they want you to. Sometimes they have affiliations with the brokers that the more you trade, the more money they make from the rebates, from the commissions, because they get a portion of it. So they won't necessarily tell you, but what happens is quite quite often is the way, especially with these challenges, FTMO. You come in and you want to be a trader, you want to be consistent, you want to have this life changing $100,000 that you can. Oh, oh he dropped it off.